Hello and welcome to another update video about Solana. We take a look at the Solana chart on the larger time frame and the shorter time frame from an Elliott wave perspective. Elliott wave is a technical analysis method that gives us a really good idea of context, key support levels, targets, and it is a method that allows us to calculate market sentiment based on mathematical Fibonacci guidelines, or let's rather say Fibonacci mathematics. So if you want to learn more about it, just subscribe to the channel. There are various updates here every single day about cryptocurrencies, and they are all being looked at from an Elliott wave point of view. So let's take a look at the Solana daily chart here first. And the idea is that we could have started that fifth wave to the upside. So in a fifth wave, which we have here, current thesis is wave 4, which is a correction, completed in August, and we need a fifth wave to complete a first sequence of 5-wave patterns, which represent the trend from the December low 2022. So we need one more high, and that one more high, well, that is unfolding, but itself, it is part of a 5-wave structure, wave 1, wave 2, wave 3, wave 4, and we could have started that fifth wave of the fifth wave. And in this wave 5 now, which likely started in December, so it's wave 5 of 5, we are tracking 3 waves. That's just based on Elliott wave rules and guidelines. I don't want to dive too much into theory here, but whenever we see an ABC structure in a structure, it's likely going to be quite a bumpy ride, okay? But we will track that on the smaller time frame anyway. The current thesis is that this fourth wave internally bottomed when the price hit one of our support areas. These support areas, they are typically, they are the mathematical representations of market sentiment that I mentioned. And when the market hits one of these areas, then it is quite likely that we get a reaction to such an area. And we've seen a reaction to the 50% Fibonacci retracement at $179. So from here, as long as we're holding now the December low, the idea is that we're moving up in a fifth wave. It should be an ABC structure, and the market should reach $360 to $380 next, maybe over the coming weeks. Now let's take a look at the Solana short-term chart, because here we're tracking really the smallest movements. These smaller time frame charts are more fragile and require a little bit more adjustment because things change more frequently. But also here, the idea of Fibonacci areas that they could lead to reactions is definitely our focus. So what we've recently seen, we've seen the Solana chart break above our signal line, which was placed here at around $202. The price broke above, reached the target area. I think I removed that target area yesterday, but then added another one, which was this one, between $220 and $227, with an additional level to watch at $222. And it was reached yesterday after the price reacted. Again, you see it here. First of all, price reacted to support in December. Then we had another reaction to support here around the 5th of January, a rally into the target range, and now another test of support. So at the moment, we're a little bit in no man's land. I think the minimum expectation here to the upside, they are now definitely fulfilled. It looks good with that additional high. Okay, technically speaking, we could still be in this fourth wave. Okay, I won't rule that out. But main takeaway is we have still that's why I leave that upper support area where it is. But now, compared to yesterday, the difference is now that actually we formed that one more high. So technically, all 5 waves, even in wave C of the internal third wave, are complete. So we could start that fourth wave now. At any point, this doesn't look like a healthy wave 4 yet of that wave degree. So watching for that. It could also be that in the white scenario, if this A wave is only a 3-wave move, the pullback could be a bit deeper. So the main takeaway is, and to keep it simple, we will have to watch now if the market breaks below the upper support area, which is between $208 and $214. If yes, then we watch the lower support area, and yellow wave 4 should produce a rather weak pullback and the B wave a rather strong pullback. It would need to be an ABC structure to the downside, so like a three-wave move. We don't have that at this stage. So if it's one of the larger pullbacks that's already unfolding, then first of all, the pullback could present an opportunity. And in addition to that, there is no evidence that a low of sorts has formed. But we need a break below $208 first, because as long as we're holding above the upper support area, the market could still find some local support here. But overall, thesis is that the larger degree fourth wave is complete. I would change my view below $184. So in other words, when the market breaks below the lower support area. That's the update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.